Oke, bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
The Honorable Lecturer from UniKL Business School, the Honorable Lecturer from Department of Accounting, University Muhammadiyah of Bandung, and also all the audiences and students from UniKL and University Muhammadiyah of Bandung. Firstly, let's say thank to Allah, the Lord of the world, the Master of the day after, the Creator of everything in this universe. He has no partner. Peace and salutation to our Prophet Muhammad SAW, who has guided us into the right ways of life. Ladies and gentlemen, allow me to introduce myself. My name is Hanifah Nur Halima as Master of Ceremony and will guide this event this morning. And the first agenda is opening. Let's open this meeting by reading Basmalah together. Bismillahirrahmanirrahim. Next. The next agenda is the main agenda that we were waiting for is the presentation or the lecture series. The first lecture series for this morning is from Miss Inugrah Ratia Pratiwi. Miss Inugrah Ratia Pratiwi is lecturer from Department of Accounting, University Muhammadiyah of Bandung. And please welcome Miss Inugrah Ratia Pratiwi.
Okay, thank you, MC. Bismillah, Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Honorable Dr. Lily Susanti Samsurizal as a head of section International Partnership UniKL, and also I can see Dr. Azam and Dr. Sugiati Ningsih and all participants here. Thank you so much for coming this morning in our session. Okay. Morning, Mr. Azam. Happy to see you again, Mr. Azam. Miss Lily.
Morning.
Okay. Today, actually, I'm not give a lecture. I just want to share my research, Miss Lily. Okay. Qadarullah, Pak Erpan cannot attend this session and the next session because his son was sick and he have to go to the hospital in this morning, Miss Lily. We apologize for that.
So this morning only one presentation,
Yes,
right?
exactly.
Okay.
Exactly. Okay. And let me share my slide. Okay. Can you see my slide?
Yes, Miss.
Yes.
Okay. Okay. Thank you so much once again for all participants and all the students and all the colleges that I cannot explain or mention one by one. Welcome to the University Kuala Lumpur and Universitas Muhammadiyah Bandung Lecturer Series of 5 with me, Inugrah Ratia Pratiwi. You can call me Miss Inu. Today, I'm going to share my research. The title is The Role of Prudence on Fraudulent Financial Reporting, Modified Business Model with IFRS 16. I think better if the question at the end of our session, maybe I will present first and then you can ask anything related to this topic. Hopefully you will get something in this topic, yeah. Okay. Before we start our session, actually this article, this manuscript scheduled to be published in the Journal of Accounting, Auditing, and Finance, the Scopus 1, in the Sage Journals. The publisher in this journal is Sage Journal, and will be published in October, at the end of October 2024. So the role of prudence on the fraudulent financial reporting modified business model with IFRS 16. Okay, guys, have you ever heard IFRS 16, especially for all the students? Hello, guys. Good morning.
Morning, Miss.
Hello. Have you ever heard IFRS 16, guys? Not yet?
I guess
Okay.
not yet, Miss.
Not yet. No worries, yeah, guys. IFRS 16, we will discuss later on, one by one, okay? The title is The Rule of Prudence on Fraudulent Financial Reporting, Modified Venice Model with IFRS 16. As you can see, this fraudulent financial reporting is an intentional mispresentation of financial statements, yeah, often involving complex accounting scheme to hide financial problem or create a false impression of financial health. And IFRS 16 is introduces a single lease accounting model and require lease to recognize assets and liabilities for all leases with a term of more than 12 months. And Venice model, my novelty is in here. Venice model is introduced in 1999 by the Mosset Venice, stand out as a prominent tool for detecting fraudulent financial reporting. So Venice model is one of the proxy of the fraudulent financial reporting. And then prudence is accounting as advocate by Malby, emphasize the caution judgment. So if the company applied the prudence concept or principle, the company will recognize or anticipated losses and recognize gain only when realized. So how did these variables connected each other? Let's discuss together, yeah? Look at this one. The novelty is the new measurement. So we built new measurement of Venice model, which includes the previous 8 ratio. Venice model consists 8 ratios. So we add 1 ratios from the IFRS 16. It will be, we will add interest expense, lease interest expense ratio in this formula. So we modified the new model, new formula of Venice model, okay, and we connected with the updated IFRS 16. So actually, this research developed from the survey from the Association of Certified Fraud Examiners 2022. They reported 2,110 cases across 133 countries and 23 industries, with the total losses reaching 3.6 billion US dollar, and average loss per case of 1,783,000 US dollar. If we see the cases in the fraudulent financial reporting in the world and in Indonesia, for example, like Enron, which engage in the off-balance sheet loans and inflated earnings by 180 million US dollar. For example, Kimia Pharma. Kimia Pharma is one of the medicine company from Indonesia, which overstated sales and inventory by 32 billion rupees. So Garuda also have a new case in 2018. Garuda overstated income, and PT Kereta Api Indonesia also have a case related to fraudulent financial reporting. These cases give us a sign that effective fraud prevention required collaborative efforts from the government bodies, academia, business, communities, media, and also professions. In Indonesia, we have Institute of Indonesia Chartered Accountants, or IAI. IAI plays a crucial role by continually updating accounting standards. For example, like IFRS 16. So, or IFRS 9 or PSAK 73, we call it in Indonesia PSAK 73. So PSAK 73, it means IFRS 16 in the global. So these standards particularly adopted IFRS 16 for lease, and in Indonesia faces a critical need to establish robust financial reporting law aligned with the international standard to enhance transparency and attract business and investment. So if we see the impact, this is a survey from PricewaterhouseCoopers 2022, that the impact of IFRS 16 is earnings before interest and tax and depreciation increase. But the other side, the liabilities or lease liabilities increase more than increased earning before interest and tax and depreciation. So the implementation of IFRS 16 has had substantial impact. If the company adopting this standard lead to significant increase in reported debt and expenses affecting financial ratios. In this research, we divided into two perspectives. The first one is auditing perspective, and the second one is financial accounting perspective. We use fraud as a variable to describe our auditing perspective under hexagon theory, and we built a real earnings management to present the financial accounting perspective. We collected the total articles are of 247 articles from Scopus, and then we are mapping that articles, and then we got that from the researchers. Fraudulent financial reporting more discussed from the auditing perspective. So financial reporting manipulation often terms from the business interest and earnings management practices that misrepresent actual condition. So this research aims to advance understanding by integrating both audit and financial accounting perspective by prior pilot project of 247 Scopus article. Since 1999 until 2023, start from the Venice model established. So we use a literature study, PostViewer. Maybe for all the students, you can use PostViewer to develop your literature review. PostViewer is a tool to help us see the phenomenon or see the topic of our research. Yeah, from the result of literature review via PostViewer, we from 1999 to 2023, the research related to fraudulent financial reporting contained 274 Scopus articles. So you can download. This is free, guys. So you can download PostViewer and then you can use for your future research. Yeah. Okay. And the novelty. This is very important, and then this is the main of our research. Yeah, the novelty. Our novelty is fraudulent financial reporting, and the proxy of fraudulent financial reporting is Venice model. As you can see, this Venice model consists of 8 financial ratio. Okay, you can see this like day sales in receivable index, gross margin index, asset quality index, sales growth index, depreciation index, sales general administrative index, leverage index, total accruals to total assets. But these ratios have weakness. So we can see Venice only consider the leverage. Look at this. Venice only consider the leverage as a debt item. Whereas according to Wagan et al., the company's solvency rate is not only reflected in the debt performance, but also in the ability of the company to meet interest payments in the performance of its operations. So according to Makarim 2022, this the article Scopus 2, the interest burden contributes to zero earning discontinuity. So the company pays the risk of the solvency or bankruptcy in the future. So guys, this is our framework why we found why we built our research start from the IFRS 16. In Indonesia, the IFRS 16 implemented since 2017, but the mandatory for all the companies listed in the Indonesia Stock Exchange start from January 1st, 2022. So the impact of the implementation of IFRS in Indonesia, we can see start from the leasee side. So the leasee side, if the company applied IFRS 16 with the operating lease method, and then they transferred to financial lease, the impact would be their lease liabilities increase, lease asset increase. So in the future, the company will face will be recorded will record lease interest expense and depreciation expense. So we focus on the lease interest expense as our novelty variable. So the transformation IFRS from the operating lease method to financial lease method will impact the financial ratio of the company. So earning before interest tax increase, lease interest expense increase, net income decrease. So the current ratio decrease, debt to equity increase. What does it mean? It means that the company faces the risk of the solvency and the liquidity. So at the end, if the manager, the opportunist manager will be beneficial this method, and the effect will be the opportunity of fraudulent financial reporting will be increased. So how we build the new formula, we have 6 stages. The stages 1, we classify the companies into manipulators and non-manipulators based on the Indonesia Stock Exchange special notation. And then the stage 2, we involve calculating 8 ratio Venice model. Okay, we built the pilot project for the first, before we collected all data from the Indonesia Stock Exchange. We built pilot project, like a pilot project. We collected 118 companies. Okay, 18 companies. So the criteria provided 354 data since 22 until 20 until 22. We only observe these sectors because based on the research from the PricewaterhouseCoopers, retail, airlines, professional service sector, a very high impact of the IFRS 16. So we collected from these sectors. Stage 3, each ratio was computed and evaluated against the threshold. In Venice model, he has threshold minus 2.22 to 2.22. 2.22 indicate the highest probability of fraudulent financial reporting. And then the stage 4, we detection model values, we integrated 8 ratio into dichotomous variable, one for a manipulator and otherwise 0 for non-manipulator. And then the stage 5, we introduced the new model. As you can see this, we have a new model. We add lean adjustment to represent the fraudulent financial reporting connected with the IFRS 16. So at the end of the sixth stage, we have new formula. How did we get the beta or the coefficient model? We use the probit regression model. Okay, so as you can see this, we use previous research. In this previous research, we used several articles from Scopus Journal, okay, and we collected from POP, Publish or Paris. So, guys, have you ever heard POP? Guys, hello. Hello, hello, hello. Students, are you there?
Yes.
Okay, Miss Lily. Okay, you can use POP, yeah, guys. POP, you can use POP. POP is very useful and help me to find all the article from Scopus. You can download POP from this link, okay, and then you can find the display like this. If you want to try, it's okay at home. You can try like this, yeah. You can choose the Scopus, this one. Okay, get this. You can click Scopus, guys. Okay, and then you can choose the topic. Okay, for example, my topic is fraudulent financial reporting. So you can type the fraudulent financial reporting like this. Fraudulent financial reporting. Yes. Okay, and then choose the period. For example, 1999 until 2023, and then search. Okay, so many articles here we can use, and all of these articles are from Scopus Journal. So students, you can try this. Okay, maybe you can try at home. Yeah, I will give you the link and then you can download. This is free, yeah, for you, so you can use for your future research. Okay, now any questions until now, students? Any questions, or all participants, any questions? Not yet. Okay, if there is no question, I ask you, yeah. Okay, so where's the students? Hello, students. Honey. Okay. Okay. Maybe I need one volunteer here. The four students. Students, hello. Cindy, Irfan, Fauzi. Hello, guys. Farhan, Putri. Okay, Honey. You're students, right?
Yes, Miss.
Okay. What do you think? Do you have a topic for your future research, Honey?
Maybe about. Wait a minute, Miss. Uh, I have one, but I forgot. Wait, Miss.
Okay, it's okay. Yes, sir. Yes, sir. I see the yes, sir here. Yes, sir is one of my students, right? Okay. Okay. Or from the Unique L students, you can ask anything, guys. Okay. One topic, for example. I give you one example, yeah? Okay.
Maybe about current ratio and dividend payout ratio.
Okay. So the topic is a dividend payout ratio. Okay.
Yes,
You can type this one, this part. Okay. Dividend
payout ratio.
payout ratio. Okay. Dividend payout ratio. You can type. Okay. You can choose the period, yeah? Start from 2022 until 23, maybe?
Miss, I'm sorry. I think you got typo.
Oh, yes.
Yes.
Exactly. Thank you. Ratio. Okay. Good. Like this. Honey, you can try at home. Yeah, you can download POP and then you can search from the Scopus journal, and then you will get the uh, all the articles from. Okay. Okay. Yeah. Next.
Okay, Miss. Thank you.
Thank you, honey. Okay, maybe you can back to slide. Okay. Next. How about the concept of framework? Our framework built from various variables, yeah, independent variables, proud with the hexagon terminology of hexagon theory, and then real earnings management, agency cost, and then we have the moderating variable, prudence. Prudence is the accounting concept, accounting principle. We use prudence as a variable, a moderating variable. And then we have the dependent variable, fraudulent financial reporting, which is this is our novelty in here. So we have a control variable like firm size, firm age, operating loss, share issue, and because in this research we uh, we collected the data start from 2020 until 2022, so we found that the risk of the pandemic period, so we have a variable control. The name of variable is dummy pandemic. Okay, and then the sample. The sample in this research, we collected the data from Indonesia Stock Exchange, start from 2020 until 2022. So, and then we we not in companies that are not included in the financial sector. So we excluded the financial sector because financial sector has different characteristic. So we we do not observe in these sectors. So and then we carry out leasing are marked with the companies that report lease liabilities. At the end, after the outlier data, we outlier data was obtained through outlier testing. So we got 10 companies were excluded from the research data. So at the end, we have 828 data from 3 years observation. So as you can see this, guys, this is our result, yeah? Okay, no worries, guys. It is simple. Actually, it is simple. You just you can see this. Okay, just look at the sign, the prediction, and look at the result. Okay, let's discuss one by one. Yeah. Okay. In you at your on your right side, vanish model without novelty, lean adjustment. Okay, we run the data, okay, without novelty. Okay, and then the left side, we run the data with the novelty included here. The conclusion is, if we do not include the novelty, the adjusted R square 10.44, and when we add the novelty in this model, the adjusted R square increase. It means that our model has the strongest significant influence. Yeah. So, and then you can see this. The result shows that FTG is the financial target. Financial target has sign positive, and the probability is significant. If you see the star, okay, start like this, it is a significant influence. So what does it mean? So the financial target has a positive influence to the fraudulent financial reporting. Okay, so if the company has the financial target, or the financial target increase in your company, it will be we have opportunity to increase fraudulent financial reporting. Okay, how about this? FCB. FCB is the financial stability. Okay, if our company has a financial stability in our financial, and then it will be decrease the opportunity of fraudulent financial reporting. Okay, because it is significant. Okay, you can see is the star. Okay, and then below 0.05. So it means that the financial stability, the influence of financial stability has a significant influence to fraudulent financial reporting. Okay, so guys, and we do not only test the primary test, but also we have the expansionary test and the robustness test. So we done the multiple tests in this research. The robustness test, the results show that the Venice model with the novelty has a higher adjusted R square. Okay, and then from the probability, as you can see this, the star only 1, 2, 3, 4, 5. Yeah, and then after we add the novelty, the significant increase. So the new model sensitivity to the detecting fraudulent financial reporting. Yeah, I think we can consider this new model, okay, to represent the fraudulent financial reporting nowadays if we connect it with the IFRS 16. So, and then the next test, we also done the expansionary test 1 and 2. As we discussed earlier, guys, we divided into two perspectives: auditing perspective and fraudulent financial accounting perspective. We also done the expansionary test for two perspectives. The expansionary test 1, we done the research. We expand this model. As you can see, guys, this is our lean adjustment is our novelty. And the result shows that adjusted R square for our novelty is very high. It means that this model very strongest to describe the fraudulent financial reporting. Okay, we use the smart PLS to run this data. Okay, and then the expansionary test 2, from the perspective of financial accounting, we expand the real earnings management. real earnings management, we observe from the three proxies, from the expense, discretionary, from the cost production perspective, and then from the cash flow perspective. So we expand a real earnings management to describe the financial accounting perspective, and the result shows that fraud has a significant impact to fraudulent financial reporting. So at the end, we can conclude that our research in this research financial target positively affect fraudulent financial reporting, and financial stability has a negative significance to fraudulent financial reporting, and then prudence also moderates the influence of this factor and weakening the effect of financial stability. Arrogance also collusion, and then has the impact in effective monitoring of fraudulent financial reporting. And at the end of our research, the expansionary test 1 and expansionary test 2 so that the both audit and the financial accounting perspective, that the least interest expense has high significant toward influence toward fraudulent financial reporting than 8 ratio balance model 1999. So our suggestions that for our regulators, uh, regulators should consider forming ad hoc team and supervisory board member to evaluate the post-implementation of accounting standard, especially for IFRS 16. For the future research, should specifically explore the financial sector that we haven't observed. Okay, and then the Indonesia Stock Exchange need to extend the availability of the fraud data, because in Indonesia very difficult to collect the data, especially for the fraud company. And then at the end, the company should focus on maintaining financial stability, because our results show that financial stability has the negative significance to fraudulent financial reporting. Okay, guys, I think this is our at the end of my session. Okay, maybe back to MC. Thank you.
Thank you, Miss Inugra Ratia Pratiwi, for her presentation. Maybe if there's anything that the participant would want to discuss or ask to Miss Inugra Ratia Pratiwi, to Miss Inu, boleh silakan please to raise hand, or maybe you can write your question in the chat room.
Okay. Any questions, guys? From UniKL or Bandung?
Good morning, Miss Lily from UniKL.
Miss Lily, hello.
Hello. I hope after this, Miss Nugra can share the slide with us at UniKL. Okay. Just now we talked about IFRS 16, right?
Right, exactly.
Okay. So, okay. My question is it IFRS 16 adoption in Indonesia, is it a compulsory for all business or only for your public listed company?
Only public companies listed in Indonesia Stock Exchange. Mandatory to the companies have been listed in Indonesia Stock Exchange.
Okay.
How about in Malaysia, Miss?
We in Malaysia, they must adopt all across the board. Is in for example for public listed and also the small medium enterprise. I believe the adoption is standardized. It depends on where the implementation is. As far as I recall, when the IFRS 16 started, isn't it 2019?
Yeah, mandatory is 2019, but in
No.
Indonesia,
Huh?
we Indonesia Association, IAI, or
Uh,
Indonesian Association of Accountant in Indonesia. We
mm.
start from January 1st, 2022, Miss.
Okay, okay.
IFRS start from 2019. It is true, but in Indonesia we start from 2020, January 1st, 2020.
Okay, it means Indonesia have to follow also MFRS, right?
Yeah.
Because sometimes I got confused because most countries that adopt IFRS, those countries under Commonwealth.
Yeah. Actually, for small business enterprises in Indonesia, we have another standard. We have a specific standard. The name of standard is standard EMKM. Entitas kecil dan menengah, Miss Lily.
Okay, okay.
Uh-uh.
We have also a
Mhm.
different
Yeah.
regulation for small medium enterprise
Mhm.
accounting regulations. Yeah.
Mhm. Also.
Okay.
Okay, thank you, Miss Lily.
Maybe after this, you can connect with Madam Mazlina and Madam Dayang because
Hadiza, Mas,
yeah,
Miss Maslina, are you here?
Yeah, yeah. I
Hello.
think I think this one is more in Dayang's what do you call it, court, because
hot.
I'm doing
Uh,
group accounts. This
Hmm.
one is more to Dayang's forte lah.
40.
But never mind, we can still connect on other things.
I'm happy to see you again, Miss Mazilana.
Yeah, yeah. Glad to see you this morning.
UniKL students, any question?
Hai, Assalamualaikum.
Assalamualaikum.
Ah,
Mr. Azam. Hello.
Hi, Dr. Inu. Great presentation. I have
Thank you.
a quick question.
Mhm.
Um, the IFRS 16,
Mm.
I think one of the focus is to discourage off-balance sheet financing
Mhm.
issue. So, is there any contribution from the new model you propose using Vanish to detect all this matter?
Okay. Yeah, exactly. It will be impact IFRS 16 will be impact to the financial ratio, Mr. Azam,
Yeah, yeah.
especially.
So
Mhm.
so does this Banish model, that the new modified Banish model can help to detect this?
Further.
So does the model that you propose can help
Mhm.
to reduce or detect this issue of balance sheet financing?
Financing, yes, of course, because if we use positive accounting theory, Mr. Azam, in the positive accounting theory state that the managers, the opportunist manager will be beneficial this method to create accounting treatment. Okay, so if the positive accounting theory state that we have bonus if the company give the bonus based on the income, so the managers will want to increase the net income, right? So they will create accounting treatment that, of course, the intention is not good. Okay, so that it can affect the fraudulent finance reporting. And also from the covenant, that covenant, if the company borrow money from the bank or the outside the company, so the company face the risk from the external financing. So the manager will create the way to create how to minimize the risk of the fraudulent financial reporting. It will be impact the fraudulent financial reporting. So the contribute that our model is to minimize the opportunity of fraudulent financial reporting. I think that's it, Mr. Azam.
Yeah.
Mhm.
Okay. Good. Thank you very much.
Thank you very much.
Yeah.
Any more question? If there's no question, I think we can go to the MC, back to MC. Thank you so much, Mr. Azam, Miss Lily, Miss Mazilena, Miss Daya. Okay, thank you. Back to MC. Thank you, MC. Honey.
Okay, thank you very much for Miss Inu, and maybe thank you to the lecturer from UniKL to have a great discussion with Miss Inu here. Maybe if there is any question from student, you can raise your hand or send it in the chat room. And if there is no question, maybe we will close this meeting for this morning, and we will continue the second session at the afternoon from UniKL.
Okay.
Okay.
About the documentation, honey.
Yes.
Documentation in this station. Have you
Attendance.
take a picture?
Yes, Miss. Yes, Miss Lily.
Okay, we will continue at 2 p.m. Malaysian time. Okay. And I think the UMB also need to put a link for your student attendance, right?
Yeah.
I don't see the link yet in the chat group for UMB, and also for you check our WhatsApp group for your attendance for this morning session. Another one, I need from UMB to update the program, since because I cannot capture the name of presenters since day one. I need the name of presenter and the topic of presentation because I need to update the agenda. Okay,
Okay.
thank you.
Okay, thank you so much, Miss Lily. I will ask Pak Ervan to update the agenda, and then the attendance list. We will provide the attendance list for our students. Thank you so much, Miss Lily.
Okay, have a good day.
Participant, have a nice day,
Okay,
guys.
we see
See
you back
you.
at 2 p.m., right?
Yeah.
Yeah.
I believe most of the girls, because boys all goes to praying, right? So
Pray, exactly.
okay. So you hope boys can join 2:30 after for Malaysian time, okay?
Okay. Thank you, Miss Lily.
Okay, thank you.
Yeah.
Thank you,
Okay.
everybody.
Thank you.
Thank you, everyone.